Calling and buloluku with whatever we do. Jioni safu no la with whatever we do. New school, nyepamne ne kudluku. Na nyepamne ne kudlukula. Ibuloke nungoto ni beti sola. Ibuloke dato ni betoto.
Bigi Congo. Na?
Lali te jibe norin te nyame lamin.
Kabana wulo kono.
Wulo kono nyinta mo lamin.
Pabilenki.
Muna ngata afamole.
Haina.
Ngata. Ngoto le.
Mingi. Baba nyola.
Ngoto le Faburama.
Na mu jumara kan kuma diten.
Faburama.
Jumara mu.
Ndele bare muso.
Lunda mana. Jamani mbere.
Alindo ko.
Jamani.
Bari ngoto mon kontande.
Bari jamani fana na ramudu mon kontan.
Ngoto minaka ngala min de fon filitala. Lamin jibe nori nyala.
Lamin ite sira sama ne benki. Yala so tol sayni no bo ngol ko momo.
Ngoto.
Nam.
Ite dinte kilo diata bake karamu ngoto. Anu santeng ministry ko di ngole si suwo ko amake ko do holi de.
Si bitun.
Ala ni ko kede namo
ina karta bulo be damna ala nije.
Ngoto.
Nam.
Ngoto mon kontan fere.
Jamani mu ne keda.
Ite ka lamin ki wulo ko no nyintai mon ko do fete malo lamin mo kala karango.
Jamani karamo be sorande ne ko fasita wulo ko nako.
Baba.
Karam iko karam wol soronda amake ko ngoli de lem. Ngoto. Dini wonyanta silala ala karango la mo yamen kaben fue. Man kontande. Amande.
Allah nyin kombo kurang adan dalla kombo len do la jan karamu. Kamen kurang ma daro lo kombo. E don dol fana na karamu wol soron la min adara lo nyino la aman dara fena sokon. Ala mu nekela.
Fede malo ko lesinol de ke radio to.
Nga fine.
E ko nyari mo la min.
Nga fine.
Ya mu na fonye.
Bir kabin mina kan ntambita nteri maning fatu.
Ha.
Ntambita la sukala ala dini wol bebe siri be la moyka.
Fa jere ni talanta nen kili waro. E be serin jele.
Sa lamin farante ku kili wo ke no la ba lamin bita ka wulo ko no nyinta mo alami.
Aman dara fenela.
Ite dide ko ni man si yakaru lesinol la moy radio to e balon na.
Mu ne ka ke afanye ba nyara ni alon.
Kelentel jikot.
Afanye ba mu ne be ke.
Ite balontel be cikritel. Ni man karambe ku kele. Yaje nata karana mbasa malaya ay tarije.
Bar nyarande. Kombo kurang ho findira kombo. Ile na raje ni sonka ba ko la min manyana tala. Afanye membe ko.
Ko to wole nati. Bawo ngalle ni lamin kuntal. Ko kombo kurang asototal wala kinai ko e sisu ko no. Bari ni ko e sisu ko no ibe karangol dike la radio ni telel to. Hani tele masoto to nyaay man tele soto la bongo bar radio be bulan ko to. Batiri sanga ay si ay alama.
Sa do kala nyaadi.
Ko ta o bulaji.
Ado kala nyaadi.
Kamun ke nyaadi.
Radio abo la mo la ibe mona falaje.
Kala jele. Baby jele. Baby
Toto moy fa so wolya ngom me tambi kana ngadi ngol debe ikadum bu ko de kana ba mo
asototal de.
La min mala be kara wala de.
Bari laftalal ideal on ko inde every year second wala fourth.
Muna ni ko di
ha ko ndego folle sinina ba ndele sinino ne ba
mba say mba foke en koto wole fango yen wulindi yalo famo keta bat yin fana bulata ko do me yen nati jambi la min nyanta karana ndel beji ko be nyine ka kara wulo kana ta kilari ya bambalo yo be bulaje en koto dinni ngoy si ayala le sino la moy radio
wada ka munda kara mo man so la min nyanda kara si so na regula
sila le ayala le sino kilari
mo be ngala ko mo say mi do ne ko la da ba rosa no re ba no bari woro jele ba ngam ra do man ne ara jaar woro ko fendi mo la ba min tayra ba rosa
bara te ku folo aji
teku
bari ko do famo ke
ja image nani nambol si zol le ke je kisigi man si zol no le kabun kan nyoma ba nyambu kino ni manya na ka fendi ni nambe ko so la ga
ngale limbeta de be nyambo do dilanna
ñara ni ko ri ñara nata
bari famo kada
nata tabi bungono ñara ngando ko fele ko ke de bar nganda ni pelo la dija
iyo tar la
bungono bismillah bisu diara
pendulala yefu ngotanka he koro ta he koro
wonderful viewers and listeners. My name is Bubaba. Topic of this is basic elements of accounting. Basic elements of accounting. Now we are going to discuss on the meaning of assets and its types. The second one, the meaning of liabilities and its types. And the third one, which is the capital. Now let's look at the meaning of basic elements of accounting. Now before going in for the meaning, let me just simplify this word, the word basic. Basic means fundamental. Basic means fundamental, and elements mean component. So basic means fundamental, and elements means component. Let's look at what's the meaning of basic elements of accounting. So the basic elements of accounting are the fundamental components that make up the basic for financial report, such as balance sheets and ledgers, etc. Now these basic elements, this is what the accountant needs. Such financial statements are balance sheet. The word balance sheet. Let's look at balance sheet. Balance sheet. Now, when we say balance sheet, basically, we said it's a financial statement that shows the financial position of a business at a particular point in time. Balance sheet shows the financial strength and the weaknesses of what? A business at a particular point in time. It shows all the assets, liabilities, and capital. When I said it includes all the assets, liabilities, and capital, I am referring to the fixed assets, the current assets, the current liabilities, the long-term liabilities, and the owner's equity, which is the capital. That is talking about balance sheet. It says it's a financial position of a business that shows the financial position of a business at a particular point in time. It shows the financial position of a business at a particular point in time. Or you can say it's a financial statement that shows the financial position of a business at a particular point in time. That is the meaning of balance sheet. It shows all the assets, liabilities, and the here ledgers. Now when we said ledgers, we said it's the financial of all transactions in a subsidiary books where double entry principles are completed. Now when I say the word double entry, we said is the act of debiting and crediting two separate accounts at the same time with the same value or amount. Meaning, if you debit, you must have a corresponding credit entry. That is double entry. Now we move to the first basic elements of accounting. That is, basically in accounting we have three basic elements. The first basic element is assets. Assets. Now let's look at the meaning of assets. We say resources or properties owned by the business or organization which have economic features over their useful life. And assets can also be categorized into two. You can also call it classification, types, or division. Now let me elaborate on assets. Now basically in accounting, when we said assets, we said these are the resources of a business. They are the resources of what? A business, or they are economic resources of a business at a given period of time. Now why are they called economic resources? Assets. Why are they called economic resources? because they generate income for the business, because they are used for day-to-day activities of a business. Now, example, we have two types of assets in accounting. The first one, we have current assets. The second one, we have fixed assets. Now, the lesson proceed. Let's discuss on each of these types. Now, we have current assets, and the second one, we have fixed assets. Now, when we say current assets, we say these are resources or properties of the business that can easily be converted into physical cash, though they are assets the business use in their day-to-day activities. They are also called circulating or floating assets. And examples, we have stock, debtors, cash and bank, prepaid expenses, accrued income, etc. Now, basically, when we say the word current means something that can last for a year, meaning something that can last for a year, and assets is the resources. When we combine these two words together, we'll give you what we call current assets. When we say current assets, they are assets that can last for a period of 1 year. And they are also assets that can easily be converted into physical cash. They are also used for day-to-day activities of of a business. And now let's look at the example here. Remember, they are also known as current assets. They are also known as circulating assets or floating assets, because they keep on floating within the business. Now let's look at the example. We have stock, debtors, cash and bank, prepaid expenses, accrued income. And there are two types of stock. We have the opening stock and the closing stock. Now when we say opening stock, we say these are goods that are available at the beginning of the year. And closing stocks, they are goods that are available at the end of the year. Another stock can also mean opening inventories. And closing stock can also mean closing inventories. So that is current assets. Now on the second type of assets, that is the fixed assets. Asset, we said they are assets that can last for more than a year, and they cannot be converted into physical cash. They into physical cash. And now fixed assets also are not meant for resales. They are not meant for resale. They are also known as non-current assets. They are also known as non-current assets. Remember, in a business, these fixed assets are used for further productions of goods and services. This is why fixed assets, they are not meant for resales. And now let's look at the example of these fixed assets. Now the first example there is plant and machinery. You have motor vehicle, etc. Now remember, we also have the types of fixed assets. Types of fixed assets in accounting. Basically, there are two types of fixed assets in accounting. The first one is tangible fixed assets, and the second one is intangible fixed assets. Now, I'm going to explain what do you mean by tangible fixed asset. But before explaining the word tangible fixed asset, I just want to simplify this word tangible. The word tangible. 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 Now when we say the word tangible, it means something touchable. Something touchable. Touchable. T-O-U-C-H. Something touchable. Tangible means something touchable. The word fixed is something that can last for more than a year. And asset there is talking about the resources. Now let's look at the meaning of tangible fixed asset. We say these are assets which are fixed in nature. They can be seen, touched, and felt. Meaning, tangible fixed assets are assets that can be seen physically and touched. They are assets that can be seen physically and touched. And let's look at the example here. For tangible fixed asset, we have plant and machinery, motor vehicle, furniture and fittings, etc. And the second type of fixed asset, which is intangible fixed asset. Now, before going into the meaning of intangible fixed assets, let me simplify the word intangible. 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 Intangible, in a simple word, untouchable. Untouchable, meaning something untouchable, something that cannot be touched. But in the real accounting context, we said intangible fixed asset. These are assets which are fixed in nature and cannot be seen, touched, and felt. In accounting, intangible fixed assets means assets that you cannot see and touch physically. In other words, they are invisibles. They are assets that are invisibles. Now let's look at the example of intangible fixed assets. The first example there is goodwill, and the second one is patent right, and the third one is copyright, etc. Now when we say the word depreciation, when we say the word depreciation, now we said depreciation is the gradual reduction in the value of tangible fixed asset as a result of wear and tears. Meaning, when fixed asset lose its values, it is described as what? Depreciation. And amortization is the gradual reduction in the value of intangible fixed asset. Is the gradual reduction in the value of intangible fixed asset. So these are the two different. The difference between tangible fixed asset and intangible fixed asset. The tangible there is the depreciation, and intangible is the amortization. Amortization. That is the gradual reduction in the value of intangible fixed assets. Now let's move to the second type of, that is the second basic element of accounting, liabilities. When we say liabilities, we say these are financial obligations of the business which must be paid within a year or more. And we have two types of liabilities. We have the current or the short-term liabilities, and the second one is non-current or long-term liabilities. Now when we say liabilities, we say they are financial obligations of what? Of a business which must be settled within a year or more. But before moving to the two types of liabilities, in a simple sense, liabilities can be defined in three ways. The first word there is claim. The first word there is claim. C-L-A-I-M-S. Claims. That's the first word, and the second word is the debt, and the third word is obligation. Obligation. Now I'm going to explain these three words. If you are defining liabilities, you can use any of these words. Now when we say claim, in a simple sense, we said claim is the amount of money requested from the business by an outsider. Is the amount of money requested from the business by an outsider. Example, when a business purchases goods on credit from buyers, meaning from its creditors. So in returns, the business needs to pay back. So if the creditors requested their money from the business, that's what you call what? Claim. Is the amount of money requested from the business by an outsider. Example, creditors, etc. Now the second word there, that is the debt. When we say the word debt, we said is the amount of money that a business is owing. Example, let's say a business purchase goods on credit from its suppliers, which worth $10,000. So in returns, this is what the business owe to its suppliers or to its creditors. So that is the total amount of money that the business is owing to an outsiders. Example, you have creditors. If a business takes loan from the bank, therefore, it can also be what? If business took cash loan from the bank, if the bank requests that amount from the business, it is what? A debt. Debt is the amount of money that the business is owing. Now, there is obligation. When settled within 1 year or more, it must be settled. The business must settle its obligation. The business is the amount of money that the business must settle to its outsiders. Meaning, if a business owes to its outsiders, they must settle their liabilities. It must be paid and it must be settled. So that's what we call obligation. So basically, these are the three keywords. If you are defining liabilities, these are the three keywords you should remember. The first one is claim. The second one is debt. And the third one is obligations. Now let's look at the two types of liabilities. The first one, we have the current liabilities or the short-term liabilities. Now when we say current liabilities, we said these are debts that the business must settle within a year. Meaning they are liabilities that are payable within a short period of time. Short-term liabilities, they are liabilities that are payable within a short period of time. They are also known as current liabilities. Let's look at the examples. The first word there is the creditors. Bank overdraft and accrued expense. Now, the second type of liabilities, which is the non-current or long-term liabilities. These are debts that are payable by the business for more than a year. Meaning these are financial obligations that must be settled by the business for more than a year. Example, if a bank gives loan to a business for a period of 10 years, meaning the business needs to pay that loan for a period of 10 years. That is classified as a long-term liability. Example, you have loan, you have debenture, etc. Now the third elements of accounting, that is the basic elements of accounting, that is the basic elements of accounting, that is the capital or owner's equity. Now when we say capital, we say this is the total amount of money or resources invested by the owner to start or commence a business. It can only be a liability when the owner decided to withdraw or take it back from the business. After the investment is always have a credit balance. Capital always have what? A credit balance. Now when we say capital, the word capital, that is the third element of accounting. Now is the total resources, that is invested by the owner to start a business. Example, Lamin started a business with an amount of 10,000 on 1st of January 2020. So that 10,000 there, is the capital of Lamin. And this is what he started business with. This is what he invested into the business to start a business. So this is what we call capital. And capital always have what? A credit balance. Remember, when you are dealing with the double entry system, now capital always have what? A credit balance. Capital always have what? A credit balance. Now we move to the questions. Let's look at the revision questions together. Now the first question there is define and state two classifications of each of the following. And letter A, we have assets, and letter B, we have what? Liabilities. In our lesson, we have discussed what is an asset. Now, assets. Now let's discuss on assets. Now when we said asset, we said these are the resources, or they are the economic resources of what? Of a business. And the classifications is, you have two types of assets. You have the fixed assets and the current assets. Now let's look at B, liabilities. We said liabilities are financial obligations of a business that must be settled within a year or more. And the classifications, we have the short-term liabilities and the long-term liabilities. And the second question there, explain the basic elements of accounting. Basically, we have three basic elements of accounting, and we have discussed that one in our lesson. Now, the first basic elements of accounting is assets. The second one is liabilities. And the third one is capital. Now, when we said assets, we said they are the economic resources of what? Of a business. They are the economic resources of a business. Why are they called economic resources? Simply because they generate income for the business. They are used for the day-to-day activities of a business. Now, the second basic element, that is liabilities. We say liabilities are financial obligations of a business which must be settled within a year or more. And the third basic element is the capital. Capital is the total resources invested by the owner to start what? A business. Let's move to question 3. An alternative name of capital. As we discussed it in our lesson, an alternative name of capital, meaning another name for capital is owner's equity. It belongs to the owner of what? A business. And the fourth question is, explain the following: fixed assets, current asset, debtors, and creditors. Now, when we said fixed asset, we said they are assets that can last for a longer period of time. They can last for a longer period of time. And letter B, current asset, we said these are assets that can easily be converted into physical cash. And letter C, we have debtors. Debtors, these are individual or businesses that is owing a business. Whilst creditors, they are individual or businesses that a business is owing. Question number 5, state 2 classification of fixed assets and give 3 examples of each. Now, when we say state, you have to write something. Now, when we say fixed assets are divided into 2. You have the tangible fixed assets and intangible fixed assets. Now, when we say tangible fixed assets, we say these are assets that can be seen physically and touched. And the examples are plant and machinery, land and building, equipment, etc. The second type of fixed asset is the intangible fixed asset. So these are assets that cannot be seen and touched. They are invisible. Example, we have goodwill, patent right, and copyright, etc. So I'm going to stop here till our next lesson. I thank you.